All right. Well, welcome to the Value Charts webinar series, Big Fish Trading. My name is Dave Aquino. I am the Stocks and Options Live Trading Room Specialist for ValueCharts.com. I run the Stocks and Options Live Trading Room every single trading day, and I look forward to bringing to you this webinar. I'll have to get into the story behind Big Fish Trading, but let me just let you know, this is one of my favorite workshops that I've ever done. And not only do I find it exciting and the type of big time trades that, you can tell stories about, and you always remember, because they can make such an impact on your trading and be a really big confidence booster. It's the stories I've heard from my traders, a really positive experience. When things fall into place, it's almost it's a big rush in trading. So I'm looking forward to bringing it to you this evening. If at any time you all have any questions when we're going on here, feel free to go to the GoToWebinar side menu and input your questions there. Usually the questions come frequently and at different times. If I know I'm going to address the question in the webinar, I will answer it at that point. If not, we'll leave it to the end, and then I'm more than happy to stay after the fact and answer questions as they come about. Okay? All right, so again, if I've had a little bit of trouble with the audio, so I don't know if it's the connection with GoToWebinar or something like that. If for some reason the audio gets fouled up, feel free to just start typing. I'll see it right away, so we'll make sure that nobody gets left behind. And yes, I am recording this webinar session this evening. Okay. Let me make sure here. Okay, here we go. There's my pen. All right. So, Big Fish Trading. Okay, a little bit more about me, just really quickly, so you know who I am. My name is Dave Aquino. I'm a 1995 graduate of Vanderbilt University. A year after I graduated, I became a general securities broker with Merrill Lynch, and I did that a number of years. And then after my stint with Merrill Lynch, I joined the Vanguard Group just outside of Philadelphia, Pennsylvania. I quickly moved up into the high net worth services area, specifically the asset management service, where we actively managed people's portfolios and kept everything in balance. For 12 years, I was in the Ultra Services Group. We managed large-scale family portfolios. My job was to handle the highly appreciated stock, and they don't normally. Most rich people, they don't sell their stock. They utilize it as an asset and generate cash flow off of it. Also, we manage them from a tax loss harvesting standpoint, so you're always balancing gains and losses. So we did that. I did that for a number of years. I learned a lot of option strategies to generate income, as well as other unique ways to use them. For the past 27 months, I've been with Value Charts, working as the Stocks and Options Live Trading Room expert, and I enjoy it every single day. So that's a little bit about me. A quick risk disclaimer I need to read to you. I just want you to know that trading or investing carries a high level of risk and is not suitable for everybody. So before you decide to trade or invest, you should consider your investment objectives, experience, and ability to tolerate risk. Now, this content is subject to change at any time without notice. It's provided for the sole purpose of education and helping you make your own investment decisions. Now, we've taken considerable measures to ensure the accuracy of the information contained herein. However, We absolutely cannot guarantee its accuracy from the data that we receive, and we are not liable for any loss or damage which may result directly or indirectly from such content, or from an inability to access such information, or delay in or failure in transmission or receipt of instruction or notification in connection herewith. Now, any past performance results are shown for illustration and example only. They are hypothetical and as such have many inherent limitations. Now, no representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Past performance is not necessarily indicative of future results. Okay, next is the CFTC Rule 4.41. This is a U.S. government required disclaimer. The CFTC wants you to know that futures and options trading has both large potential rewards and risks. You must be aware of the risks and be willing to accept them in order to invest in the futures and options market. Do not trade with money you cannot afford to lose. This is neither a solicitation or offer to buy or sell futures, stocks, or options on the same. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this website. Now, past performance of any trading or system or methodology is not necessarily indicative of future results. Now, if you have any questions on these two disclaimers, feel free to contact us at valuecharts.com. We'll be happy to help you. All right. Thank you for that. Oh, thank you. Someone just let me know. Screen did not change. Here's the risk disclaimer. Trust me, I'm not going to read it to you again. I just want to put it up there so you can see it. Here's Rule CFTC 4.41. There we go. Thank you for that. And just in case you missed it, there's my pretty picture. All right. Thank you, everybody. Thanks for yelling at me. I caught it a little bit late. All right. Yes. So let's start out with a little bit of wisdom. Okay. If you give a man a fish, you can feed him for a day. But if you teach a man to fish, you can feed him for a lifetime. And what I've found is you can dramatically change someone's life just by teaching them a little bit more about the markets. Because most of you all are already traders. You're already looking for ways to make money in the markets. I'm not here to throw a trade at you. I'm here to show you a methodology that we've found works in the markets and can consistently help you take advantage of some big moves and big moves that I see are coming up in the market. So I want you to pay attention because I think this information can really make a dramatic impact on some upcoming trades. So we'll keep moving here. Thanks, KG. All right, so let's see here. Now you can see it. See this big guy? This guy is one of the big, gigantic bluefin tunas that you can find in the oceans. I know out off the East Coast and in various other parts of the world. This is this idea of big fish trading came from my fascination with a National Geographic show called Wicked Tuna. I know it's still out there. It's kind of sensationalized now. But when it first came out, it was very interesting to me. These guys would go out and they would try to capture or catch and land one of these bluefin giants. They weigh several hundred pounds each. And these things can bring in $5,000, $8,000, $10,000 per fish. It's not like the normal fishermen where you go out and you're trying to get a small group of fish to feed your family in a day. These guys go out and they try to land the big ones. And I thought that would be really cool if we could do that in the markets. Okay? So I'm going to talk about my big fish trading system. Now this system has evolved over several years. Okay? And it's very unique because it teaches you how to see upcoming big moves in the markets, big moves in large size stocks, And when you utilize strategies I'm going to show you, plus the techniques with options that I've developed, you have a lot of potential to make a lot of money in a relatively short amount of time, because the opportunity is there. It's just a matter of technique and applying that technique in order to land one of these big fish, metaphorically, in the markets. So let me just touch on the points in this trading system I'm going to talk about tonight. What do I mean by big fish? What exactly, do I mean when I see big fish trades, big fish stocks, and big fish opportunities? I'm going to talk about the trading strategies that I use. I'm going to touch base on the major ones that I've used recently. I'm going to talk about what I call my shark bite trade, because this is the latest add-on to the complete big fish trading system. And then I'm going to show you real life proof of trades that we've done in the past, showing you that this works. And then this is the nice one. I've added this here. Where is the opportunity now? Now I'm going to do this at the end of the webinar, so I want you to make sure you stay around, because I will actually look at the markets from today, and I'm going to show you, I believe it's at least 2, maybe 3 big fish opportunities that I really start to see shaping up. Okay. All right. So let's go ahead and jump in if there's no questions. All right. The big fish trading method basically talks about building wealth with large profitable trades. Okay. You want to see the opportunity come up, because when opportunity comes up in these big fish stocks, there's usually a big move shaping up to move right behind it. I'm going to show you how to see that trade come up. I'm going to show you how to catch the big move in the big fish stocks right from the start. And then once you have a trade on and it's starting to move your way, how do you manage that position with relatively little risk? Okay. And then when you have big profits kind of locked in to your trade, what do? Most people worry about getting into the trade. It's really neat because they don't often get to feel the stress of, wow, I have a really sizable profit. How do I manage this thing? How do I take profits and not be afraid that I'm going to miss out on even more? Or how do I don't want to hold it too long and see the big profits kind of evaporate, and then I have to hurry and scurry and get out of the trade, and I only have just a little bit of the profits I did before. What do you do when you have those kind of profits on the line? Okay. All right, so let's go ahead and jump in. Let me just make sure our questions are clear. All right. And you all can see everything. Wonderful. All right, let's get right into it. What do I mean by big fish and big fish trading? When I say a big fish or big fish trade, I mean a winning trade of sufficient profits that it can make a sizable impact in your trading account. Okay, I'm talking a trade that has a potential to do a 100% move or more. 100% return. And the next aspect of big fish trades, I want a quick return of profits. I'd like to see that 100% return in what I call a swing trading time frame that lasts only in 2 to 4 days. I would like to have relatively little risk to my trading capital. Now, those of you that have traded with me in the past know that I admire good trading. I admire nice profits like this 100% return, but I admire even more a trader that manages their capital in a way that subjects them to minimum risk. I know it's hard to understand because we've always been taught, risk and reward, they're usually equal. Not necessarily. And if you structure your trade the right way, you can go in with the idea of little risk within a big opportunity. And I'll show you more about that. Now, this 100% return in your trading, in your trade, actually reflects a 2 to 5% increase in your trading account. Those are kind of the numbers we kind of aim for when we are trading a big fish trade. So you take anywhere from 2 to 5% of your portfolio or your trading account when you put on a big fish trade. That's kind of the rule of thumb that I like to use. Some traders use 1%, 3%. I can't recommend anything, but I really wouldn't make 5% of your trading account in one trade. That's not very smart either. But again, those are numbers that I use for my trading account. And again, that's kind of just a rule of thumb. But when you have a 2 to 5% commitment in a trade, 100% return can pop up as a 2 to 5% increase in your trading account. Now, most traders' trading account goes up and then down and then down. Winner, loser, loser, winner, loser, winner, loser, 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 winner, loser, winner. Okay, this is a recipe for heartburn. All right, what you want is winner, winner, loser, big fish trade, winner, winner, small loser, big fish trade. Okay, you can see how much more an even move this is compared to this one. All right. What you are doing is building long-term trading success because it's built upon a steady increase in your account. You want consistent profits in good trades with small losses. Now, this is where this type of trading helps your trading account. We want it punctuated by a healthy dose of big fish winners. Do all big fish trades work out? No, but when you structure it the right way, your big fish trades that don't work out are not big fish losers. They're like tiny fish losers. And of course, I mean, you risk a little to gain a lot. That's not a problem. And when you do it the right way, you're going to get a lot of big fish winners. Okay? And again, that long-term trading account growth is built upon compounding your account. That is your goal. But what's exciting is when you have the idea and you have the tool in your trading toolbox of how to handle a big fish opportunity. When those big fish winners come about, they make a huge impact, not only monetarily, but a level of comfort when you trade because you have a profit cushion. You've had a history of winning. You've enjoyed that kind of growth. Big winners don't just help you financially. Big winners help you in your confidence, your ability. I have some traders, every single time they do the big fish trade and they come out on top, they say, Dave, I take 10% of it and I invest it in myself. I either improve my trading computer, I improve the workshops that I attend, I'll get another indicator, I'll put some aside for the trading room. They take that and they reinvest it in themselves. So not only do they gain the money, they gain the confidence and they gain additional knowledge. So it's all synergistic. So I want to stress that. I haven't stressed that in a while, but by working with a lot of traders, I find that big fish really makes a huge impact in several different ways. Okay? All right, so again, let's get started. We're going to get into the nuts and bolts of it. See the big fish, bluefin tuna? I love this picture. I wish it wasn't so fuzzy, but I'm a scuba diver. I can only imagine what it is to... I wouldn't want to be in the school in the middle of these guys. I mean, you'd get like killed. But just to imagine what that would look like on camera would be amazing. All right, so let's talk about large profitable trades, okay? All right, so first of all, the big fish moves in the market, the trades we're hunting for, come from big fish stock. Now again, big fish stock I define as large dollar value stocks with a large daily average true range. Okay, now these large dollar value stocks, have a tendency to make strong directional moves. They have like a high implied volatility naturally. You're familiar with them. Most people say, hey, they're the go-go stocks, they're the tech stocks, I don't care what they do. All I care is that they move well, they move in a predictable manner, and they move a lot, okay? Now, you can already guess that these stocks have highly liquid options. Now, yes, you can do big fish trades with just individual stock, but you really, in order to get the kind of returns, we're aiming for like 100% in a trade, you really need to utilize leverage, because leverage optimizes your return for your risk. Okay, when done the right way, it provides you the flexibility of taking advantage of a big move on, say, a daily chart that you see coming up, but by getting in with a smaller time frame. And that's the kind of the trick in minimizing the risk. All right, so again, these stocks have highly liquid options and they utilize leverage. Excuse me, I'm going to get a quick drink of water. All right, the examples of the stocks I'm talking about are Priceline, Netflix, Google, CMG, Tesla. Let's see here. There are a couple more that I like. I like Baidu. I like LinkedIn, Amazon. Apple used to be one of my primary go-to big fish stocks. Not so much anymore, but let's just keep going and we'll talk more about that. You can see these big fish stocks meet that criteria. Now, I apologize. Some of these numbers are a little bit off, but generally you'll get the idea. Priceline, it's $1,000 stock. It's $1,000 stock. Its average true range was around $20. I know the average true range for Priceline on certain days can be plus or minus 30. It's amazing. Netflix, this has been a while. Netflix is actually a $615 stock now. Imagine that move. And its average true range is probably close to 20 also. Google is almost exactly the same. Average true range is about 15 now. CMG, around $600. Its average true range is deceivingly, it's around $11. But the thing about CMG, there are certain times when CMG breaks free and makes a move, it can go $20 from low to high in a day. And then Tesla, depending on, this is about $250, depending on how their CEO is on Twitter or not, Tesla can move plus or minus $15 in a day, low to high also. So those are big fish stocks. They can move. And what you need is a consistent move over a 2 to 4 day period. And that kind of move can make a considerable amount of money very quickly. Okay? How do we find these big fish moves, okay, that occur over 2 to 4 days? Well, again, 2 to 4 days. Well, what we do is we use multiple time frames, okay? Multiple time frames, meaning we combine 2 or 3 different time frames. We have a longer term time frame, which is daily or weekly, but I'll tell you, I primarily use daily. I like daily. And because everybody uses daily charts, the trades shape up very clearly. We use the longer term time frame to identify turns in the market, or maybe a breakout if things have been quiet and it's breaking higher or lower, maybe through resistance or down through support. Those opportunities on the daily give us the opportunity to use a shorter term time frame, like a 15-minute or a 5-minute or a shorter term tick chart, to identify entry trades. You already know which direction you're going to go in because of the longer term time frame. Now you want to use a shorter term time frame to help you enter the trades. That's very important. You don't just jump in wherever you feel like it on the daily chart. It could be anywhere in that average true range, but you utilize a smaller time frame entry trade that's going in the same direction, and that will give you a head start into this move and protect you by having a more controlled risk parameter. All right. Yes, Amazon is one also. How's my sound, everybody? I just want to double check, because periodically I'll have somebody with no sound. I just want to make sure I'm still okay. Great, thank you. All right. So again, we're talking about the two different time frames, and I'm talking about entry trades on the short-term time frame. Short-term time frame, again, it was the 1 minute, 5 minute tick charts, whatever you're comfortable with. You want to use the short-term time frame, again, to conduct entry trades in, and this is most important, the same direction as the longer time frame opportunity. Okay? Now, give you an example of what I mean by an entry trade. Okay? Again, on a 2 minute, 3 minute, 5 minute time frame, maybe tick charts, what you're looking for is to take a bullish trade. Oh, I'm sorry. Let me repeat that. The entry trade for a bullish opportunity on a longer term time frame. If you think the daily chart's gonna to climb and go higher, well, you on the shorter term time frame, you want to look for a bullish divergence or a descending wedge that's going to break and run higher. Or maybe it's a sideways pattern like this, and you're looking for a breakout going up. That is a bullish breakout. You're looking for that on the short-term entry trade time frame, because you already feel, based on the daily, that the opportunities to the upside. But you want to use a small time frame entry trade like these three right here to get into position, to get your foot in the door. It's not to make a small amount of money. You get into the trade and you hold on for the longer term move. Entry trades for bearish opportunities on the longer term time frame. You're talking about bearish divergences like a double top, or maybe an ascending wedge that's about to break lower, or a breakout trade is bouncing and then we break and we run to the downside. That's a bearish breakout, a break of support. So those are the entry trades on the short-term time frame that we keep watching for. Okay? All right. So let's just say you saw the opportunity on the daily chart. Wow, it's making a double top on the daily. Nice double top, and it's about to break lower. Now, on the that's the long term, okay? And then now we have a short term set. Okay, I want to watch that. This area right here, what do I see? Well, maybe there was a little bit of support here, and we were coming down. We bounced once, and then we broke through. Okay, maybe that breakout level was right here based on that swing low. So once you saw that, and this is that level right here, that's the short-term time frame. I'm going to be bearish. And then you go in here, you're a bearish trader, you bought puts, now you're in it upon this breakout right here, and things are going lower. Now you have a little bit of profit. How do you manage that position with little risk? Okay. Again, by going back to that short-term entry trade time frame, you're trying to, again, have the trade go in the same direction as the longer-term time frame opportunity. So remember here, I'm bearish on the long term. I have this trade on the short term. It's bearish. It's breaking that support level. Okay, so I have puts. I have trades in place. Again, I want to repeat, it's my foot in the door. I'm not trying to make, $20, $30 on my entry trade. I want to get my foot in the door, and then I want to crank that thing wide open. So as it's falling on the longer term chart, I'm going to make even more money. It's not to make immediate profits, it's to get your foot in the door. Now, be patient, because you could get stopped out several times, right? On this short-term trade, What happens if this thing comes back up and then comes back up like that, and it maybe comes back up like that before really falling? Okay, you have to be patient. I could get stopped out here or here. That's a possibility. But as long as we keep getting weaker and I keep taking trades, the big opportunity lower is what I'm fishing for. Okay, I hope that is kind of clear. I'm trying to show you on that chart, and because it makes sense. Now, in the big fish trading system, I've also developed additional ways to generate an income by selling premium while we're waiting for these big fish breakouts to move. There are times they don't just break and run like we want them to, but there are some ways we can pull in some income to offset some of those potential stop losses that we get hit on the way. All right, so let's talk more about those of you that have ever fished before. Once you get your fish set in on the hook and you can feel them pulling on your reel and your pole, what do you have to do? You can't start the frying pan up yet because you don't have that fish. It's still out in the water. How do you fight that fish, bring them into the boat, and land them so that now you can take your profits? All right? Once you get a position into place, once you have that put in place and the longer term is starting to fall, your job is to maintain that position. You want to initially use a small risk stop loss, not based on the long-term chart, but on the short-term chart. Okay? Once it starts moving and it starts to fall, as in the example I showed you, you want to move your stop because now you have a profit. You want it to move it to a break-even stop, or what I call a no-risk stop loss. Of course, there's always a risk when you have a position, but once you move that stop loss to exactly the same point where you bought your position, then you have a way already in place in case it starts to move against you. You can get stopped out, and you won't have anything. You won't have a loss. Okay, but again, the goal is once the stock starts moving on the longer term time frame, you now have a profit cushion. All right, you can put a break-even stop, or you can trail that stock movement with a trailing stop to basically lock in your profits as you go. Okay, you want to do that with the longer term time frame. When you have a longer term time frame chart, you want to use that as the guide, not the short term movement. You want to use the longer term time frame, saying, I think that stock is going to run about this far and then possibly run into some resistance. Okay, that's your exit plan. Because if it's a double top like this, okay, comes up and now it's breaking through, well, you have something like this. Maybe this is the 50% retracement. That's one stop loss. Maybe we're coming down here, and what's that? Well, that is like the 8-day EMA. Okay, that's another level we could take profits at. And then down here, maybe that's 100% retracement. Okay, or 618 or something like that. Maybe that's what we're trading. Okay, that's a previous level of resistance. So you get in right here in the trade, you have your puts, and it falls this far, and then you take some profits right here at 50%, and that falls a little bit more and hits the 8-day EMA. You take some more profits there, and it falls a little bit more, and it gets to here, and then that's the 100% retracement. I take some more profits. So if I have 6 contracts, I sell 2 here, I sell 2 here, and I sell 2 here. Okay, that is my exit plan, because I see the potential of this big fish move on this kind of retracement. I can use something, if you're familiar, like with value charts and value bars, you can use value targets. You can use EMA levels like 8, 21, 50. I really like the 50-day EMA as a target level. I didn't want to confuse you here because I already put 50% retracement. I love retracement levels, especially the 50% retracement when I'm playing a pullback in the stock. And then right here, support and resistance level. What happens instead of this 100% retracement? What if that is the monthly? If that's the monthly low. Okay, so that's a significant support level right here. And that's where, if it gets down that far, guess what? I'm going to take my trade. Take my trade off, take my profits, and say thank you. It's okay to plan and have staged partial profit targets. No one ever said you had to get this entire move. No one ever said that. It may come down to the 50% and turn right around. It may go down all the way to the 8-day EMA and turn right around, never get down here. Okay? What happens if it goes through the monthly low and it keeps running? You can have a runner on, or you could say, wow, that was a cool trade, and just count your money from here to here, because it's still going to be sizable. It's okay. You don't have to get 100% of the profits, because you do that, you'll be the pig and you'll get slaughtered. All right, you'll end up with nothing. Okay, so hopefully you understand that, and you understand the concept of taking partial profits on the longer term time frame. Plan your exit just like you plan your entry. It's just as important. Okay, so let me summarize this. All right, big fish stocks, Priceline, Netflix, Google, Apple, Amazon, all those. You want to look at them for big moves, okay? Look at multiple time frames to help you conduct your trade. You want long ones like daily and weekly, and you want short ones like 3-minute, 5-minute, tick charts if you want, to help you enter well. The power of your entry trade allows you to minimize risk, because your stop losses are on the short-term chart. Okay? That's the difference. Your stop loss isn't on the daily. It's on the 3-5 minute. So it's much smaller in size. Okay? Be prepared to get stopped out maybe once, because the stock is still bouncing around on the daily chart. But once it breaks your way, you can really make a sizable profit. Okay? As it starts to move your way, look at your trading plan and formulate an exit strategy on the long-term chart. You want to be able to maximize your profit without being overly greedy. Do it in a smart way. Trust me, when a big fish move occurs, you're going to be too busy being happy with the results, and instead of worrying, did I get absolutely every last penny? Because honestly, if you find yourself thinking that way, you're not going to be a successful long-term trader. So learn how to be satisfied with a well-executed trade. I think you're going to be very happy with it. And then utilize the income generation strategy that I also talk about in the big fish trading system, because sometimes big fish aren't quite ready to move, and you can generate a little bit of side income to help minimize some of these short-term stops. Sometimes they happen right off the bat and they just break and run, and you never even get stopped out once. Sometimes it'll bounce around a little bit. So our traders like to do that, selling premium to generate income. Okay. All right. So let me show you how I've utilized the big fish trading system in the past. Now, some of these trades are a little bit dated, but trust me, they're not going anywhere. And I'm actually going to show you, remember at the end, I'm going to show you what's in the water now. I'm going to show you how things are setting up. In the past 2 months, big fish trades have not really been in the water. And primarily it has to do with what is happening is in the indices. All right. But things are starting to break now. They're starting to run or potential is there, so we have to watch it. But these trades are a little bit older, but still very, very representative of big fish trades. All right, so basically what we have here, this is February of last year. Okay, what I was trading at this time was Priceline on the daily chart. Now this is not a typical big fish trade setup, but it really shows you, even with smaller moves, what's the potential of a trade. I made over $60,000 in Priceline with this trade. Okay, trading, I believe it was roughly 20 contracts. Now most traders can't do 20 contracts, but even so, that's a $3,000 trade per contract. It's a tremendous opportunity. Now this was back in February, a year ago, this past February, and basically it was a pullback of Priceline to the blue line, the 8 EMA. Okay, this was actually right before earnings too, so I was a little hesitant to get in the trade, but the trade worked out. Okay, quick note. So Priceline was bouncing in this sideways channel for a number of weeks, and it came to this area called what we call the MQ trend dot area. So we had 1, 2, 3 days of consolidation right here, and then we start to move higher. Now normally a stock will move up 3 to 5 days and then pull back 3 to 5 days and kind of go back and forth. Now I was watching this momentum shift here on my MQ momentum indicator, and I saw the significantly overvalued. I saw the speed, see the red tips here, in addition to the consistency of the move. We've got 1, 2, 3, 4, 5, 6. Now by the time you get to 6 days going higher, I start looking for a potential pullback. Especially, do you see the distance we are from the 8 EMA? The 8 EMA is kind of like a mid-level. When the rubber band gets stretched too far, especially when we're significantly overvalued and we've done it for a number of days, we're looking for a pullback. Now me, I'm just trying to keep it simple. The more days I keep getting higher highs and significantly overvalued levels, the more likelihood that we're going to pull back to the 8 EMA. That's all I wanted to do in this trade. I'm not looking for a 300-point drop in Priceline. I just want to pull back to the 8 EMA. So after forming that base, 8 days straight, we're away from the EMA, significantly overvalued most of the days. And I'm watching this because I trade every day, intraday, and especially on day 7 and day 8, I'm looking for the opportunity for a pullback, a bearish trade. Okay? Right here, this date is Wednesday, February 19th. All right? This is a roughly 12 noon, maybe 1 o'clock in the afternoon. I'm just intraday trading it because I get this nice topping pattern just after lunch, and then we start to pull back. So I'm just playing just in these 3 bars. Okay, these are 10-minute bars. So I'm scalping Priceline, and I'm buying some puts, and it pulls back, and I make a little bit of money. Bounces up again on the second red arrow here, pulls back, makes some money. The third arrow, I buy some more options, and then I leave them alone because I notice this is the high of the day. And I see momentum is starting to shift lower. So I buy my 10 options and I leave them alone. Again, it's a 10-minute small time frame. I see that on the daily, remember what I'm watching for on the daily? A pullback to the 8 EMA. Now that pullback, it doesn't look like much, but this is $40, $50 worth of pullback to the 8 EMA. So that's what I'm looking to trade. So again, this is the high of the day, weakening on the 10-minute chart. So I hold those 10 put contracts, and then in this course of about 3 to 5 minutes, bam, we fall. And this move here doesn't look like much. That's a $5 move on 10 contracts in Priceline. Okay, that is roughly $350 per contract times 10. So that's $3,500 move right there. All right. And I'm trading back and forth. And I think I eventually, you know what? I misspoke. Not 10 contracts, 20. So I have about a $6,000 profit here in this couple of minutes. So I have my foot in the door. I can move my stop loss up here, you know, and then it starts to proceed lower. So I'm way down here. You can see when I got in, it is roughly 13.12. Okay. By the end of the day, I'm down here. This is below 1,300, so it's around 12.95. So from when I got in to 12.90, it's like $17 lower. So it's amazing how much of that profit is locked in. The next day we bounce higher into the open, and then it proceeds to go lower. Right here is where I took half of the position off. Okay, half the position off came out down here. On that half, on that 10 contracts right here, I've made 28,000. And then right here on Thursday the 20th, we hit the 8 EMA. Okay, this is a little bit before lunch. Why the 8 EMA? Because that's my target right here. This is Thursday, right there. So we pull back. Okay, that trade again is roughly $63,000 on 20 contracts. If you just have 2 contracts, you just made $6,000 over the course of a couple of days. I bought, these are Delta 70, between Delta 70 and Delta 60 option. Okay, this occurred at noon. And this exit occurred at noon. So technically, I was in the trade 2 trading days. Okay. So roughly, again, that was about 3,150 per contract. That was roughly, because it was right before earnings, I think it was closer. It wasn't a true 100% return, but you know, those of you that know, right before earnings, implied volatility goes up. So I probably made 70-80%. Now, that's okay. I mean, if you don't have that much money, that's not a problem. These things usually cost $2,000. It's usually about $20 to $22 per contract, times 100. But so this trade on a normal situation would probably made about 150% on my trade. Okay, another quick big fish trade. Sometimes the move, see, you're getting topping here. On this double top is a bearish divergence. Compare the histogram bars. And this move right here, once we broke below the 8 EMA and closed, over the next 4 days, we go from 604 down to, this is a right, like, I think I got stopped out here. This is 590. So this is about a $14 move. Okay, 14. Now I traded, trying to see how many contracts. Yeah, this is an $11,000 profit right here. It's a $14 move. Trading, I believe it's like 15 contracts. I'll have to redo the math, but that's just this first move, and that's based on a double top in Google on the daily chart. See the opportunity, that move, and then we bounced. Now what this is like a really weird double-headed head and shoulders pattern. Here's the left shoulder, here's the head, here's the head, here's the right shoulder, here's another opportunity. We go back from what's that? 595 down to well, actually 597 to 575. Okay, same number of contracts, made roughly another 13,000 here. 12,500. Okay, so you don't have to have one big fish target. Now, why? Somebody asked me, why did I take some profits here? We started making a bounce move here close to the 50-day EMA, and momentum starts to shift. So I took on my profits. I watched it make the right shoulder. I saw it didn't get back into the green again here, and then we fell. Momentum never really changed after that and just went straight down. So that's another 12,005. Again, you're trading one contract. You know, you can easily be pulling in $1,500, $2,000 on these kind of moves. Did I buy calls once we hit the EMA? No, actually on this right shoulder right here, that's primarily, I would be buying a break of this level. See how these three bars, 1, 2, 3, provided support? That's the break. It's not, I'm not trying to buy it up here. I'm trying to break, and I have a lot of confidence in it because my slope of my momentum indicator is going down. The important point is not the intricacies of this particular trade. The point is actually the distances we are moving. All right, we went from 604 to 590. Again, that was a $14 move. And then from 595 to 575, this is a $20 move. Okay? Those dollar amounts, when traded with options, usually run about $70, $60, $70 per dollar move. So whatever the dollar move is, $14 times 60 or 70 times the number of contracts. That's what kind of returns you can get by trading big fish stock. Okay? Let me keep going here because I'm going to run out of time. This is one example. This is a trade in Priceline that failed. All right? Now, I'm going to go through it kind of quickly because on this particular Priceline trade, we were watching how Priceline behaved. It went from this low down here to this high up here, came down, hit the 50% retracement on the daily chart. So normally I'm looking at that saying, okay, we're going to bounce. The thing is, we were still very weak and the slope was still negative. So I'm looking for a break below the 50% and comes down, looking for it to actually come down. I believe the market was falling pretty hard also, down to 1140. That's my goal. So from 1190 to 1140 or 1135, we're looking for an additional big fish move of $55 to the downside. So for the next 3 days, 1, 2, 3, I'm watching for the break below 1190. Now, remember, this trade actually failed. All right, so this is again that mid-morning top right around 1210. I'm seeing it bounce. This is actually a bearish divergence on a tick chart. See how there's no momentum? So we actually get into a position here with about 5 puts, give or take some. But the important thing is it falls from way up here at 1210. Okay? And again, if you trade the same stock over and over again, you get to learn some of its nuances and tendencies. So 1210 was a long-term resistance level. It falls, and where does it fall to? 1190. Remember? That's that 50% retracement level. I'm waiting for that big break, right? So I'm holding it. I have a profit cushion. Guess what? It puts in a bullish divergence, and it starts to move up. So nothing on this day, no breakthrough, but I did make $11,400 on this $20 move. Okay, I made it from up here, 1210 to 1190. I made 11,400, and the trade didn't work out. And that's the first day. That's June 16th, Tuesday. This is Wednesday. Now, again, same day, same midday price level. What price level is it again? 12.10. So we come down. Now we took a pretty big bounce here. So I actually got out of some of my positions here at roughly 1200. All right. When we broke through here, I reestablished my position and we went down. Where did we go down to? This level here. What level is this? 1190. Now this is absolutely looking weaker to me. This is a typical price pattern where we're about to break lower. See, test of support, test. You see how momentum is starting to fade? But we break through 1190 and here we go. No, what happens? We jump back up and I get stopped out here. Now with this stop out, this is still a $20 move. But my profits for this day, because we bounced, was 9,600. Okay, that's all we got. That's Wednesday. Did we break through that 1190 that I'm waiting for a big fish trade? No, it didn't break. It got stopped out. All right, so next trade. This one is pretty simple. Early in the morning, we started the day high, 1200, and then we hit this 11. I believe that was, we had a consolidation pattern here, and then we started to break lower below 1195. So I bought puts, came down. Where does it come down to? Our famous friend, 1190. That's that support level. And then we bounce. So I take a little bit, I make some profit here when it starts to bounce, and then we come down again. Oh my gosh, this is like the 6th time in 3 days that we've hit 1190. And what do I have? I have a bullish divergence, and then I get stopped out right here. So this day, because of this move from about 1195 down to 1190, and then this little move right here, I make a little bit less than 6,000. Okay, trying to have my foot in the door for a break below 1190. Guess what? Trade never broke 1190, and we actually went higher from here. But I still managed to take some good trades, all while on the smaller time frame, while we're looking at the daily chart. So there are opportunities to make money, even though it never works out. Yes, this is absolutely being recorded, Gabriel. How do you detect an impending move of that magnitude in the position? Well, that's where we're looking at time frames, Daniel. If you see a nice clear double top or a break of support or breakthrough resistance to the upside on a big time frame, just like we were actually waiting for a break of support on this daily chart. This is a 50% retracement. That's pretty significant. You can either go to the 618 retracement right here at 1185, or even lower down to, like I said, 1135. This was an aggressive move. And the thing about it also, the market overall was weaker. So we did not expect the 50% retracement to break, but we expected the 50% retracement to break because momentum was so strong. Look at all these red bars. Okay, the thing about it and the way we can see it is this is a big fish move. This is not a 5-minute chart. This is a daily chart. That's where the opportunity is, especially when the market is moving that way. All right, I'm gonna have to kind of get through this kind of quickly because I can talk more about the shark bite trade in a little bit, but the shark bite is basically a way to construct a nice out-of-the-box trade when a big fish breakout move occurs. The part of the trade that has the highest probability of movement or quick success is, just like I said, it's the first half of the move. All right, it is the first half of the big fish move. Now I'll show you on that chart again in 1 second here. The first half is the easiest part. Okay, it is the biggest and quickest profit right off the bat. All right, so if this is the trade, it was started from way up here in price line, and we made this nice double bottom down here, and I'm looking for a 50% retracement. So I'm down here at, I believe this is maybe a 1020, and I'm looking, no, 1080. 1080, this double top right here, see the double top? So from 1020, this is 1080, okay? And my target at the 50% retracement is up here, 1140. 1140. So from a 1080 to 1140 is 60 points, okay? This is the distance here, 60 points. That's a $60 move. For a Delta 70 option, that is a potential $4,200 move to the upside. Okay, $4,000 per contract from 1080 to 1140. Now, the first 50% of that move is this $30 move. Okay, that's the quickest. If you can actually see from the breakout to the move higher, this occurs in 2 days. And then once we start to slow down, 1, 2, 3, 4, 5, 6 before we break out and hit the 50, this is actually almost twice as much. Now, we do approach it, but we actually don't even touch it till the 3rd or 4th day. All right, so this is 3 days. So I'm taking my quickest profit right here. That's the essence of the shark bite trade, okay? I teach you that in the whole big fish trading strategy. On a shark bite trade, how do you know that what's the first half until you know the whole move? No, see, that's what most traders don't do well, Craig. And Craig's question is a good one. How do I know? How do I know we're going from here to here? How do I know that right here? If all this is cut off and you can't see any of this to the right, and you're sitting right here, double bottom, I'm getting into a position on this breakout, how do I know how it's going to go? Because my trade is already pre-planned. I'm looking at this move from this swing high to this swing low, and I already put my Fibonacci retracement. This is my target, this level right here. Will it get to it? I don't know. Okay, what about this? This is my 50-day EMA. Can it get up to that level? Yeah, probably. And it does right here, actually. Okay, that's what I'm trading. Where it goes, I can't control it. Can it make another double bottom and make a triple touch on this 1022? Sure. But my trade is from 1020 or where is 1040 up to, I'm sorry, I'm missing the trade. 1080 to 1140. That's my trade when I get into it. Can it go further? Yes. And you can, that's part of the big fish trading strategy, is how to structure your profits so that not only can you take staged profits along the way, but you can actually leave a runner on in case we go all the way up to 1262. Okay. You have to know the setup you're looking for. What are you fishing for? All right. So again, shark bite trade utilizes debit spread strategy to take advantage of that first 50% of the move. All right. The last time when I took this trade in Priceline, I actually put in a bullish put credit spread. That's part of the income strategy. And then I had some staged calls here. You can see I've had 15 contracts, 10 contracts, 20 contracts, etc., 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 all the way 10 contracts, 10 contracts. On that move, I made 76,000. Okay, from the trade that I showed you, from 1080 to roughly, and I actually held a little bit more to 1054. But you can see I'm taking profits along the way. I made 76,000 on that set of trades. Okay, if you can't do that, you cut your trade size in half. You have, 1, 2 contracts, 1 contract, 2 contracts. You still could walk away with over $7,000 profit. That's not bad. All right, now if you put together this set of trades, that you made 76,000, and you put the shark bite trade on, that would have brought in another $13,000 plus on, say, 10 contracts. That is a initial move that could bring in a lot more profits. All right, so that is what big fish trading is all about. We want to catch a massive move in stocks and ETFs. I primarily like stocks just because of the pure size of the moves. You want to use multiple time frames to get into trades early and control your stop losses on the smaller time frame with little risk. You want to use the longer term time frame to develop a trade plan and an exit strategy to help you maximize profit. I'm not saying buy 100 contracts right at the beginning and sell 100 contracts right at the very end. That's not how you maximize profit. On a consistent basis, to maximize profit is to exit with a strategy. Don't be greedy. Take your profits along the way. That $76,000 trade, that thing could easily have been over $120,000 if I was extremely greedy and extremely lucky. But it could have just blown away. Well, the trade actually was so good. I was not, and it's not my doing, it's just the stock moving. You probably would have made a pretty profit anyway. But on a consistent basis, when you trade this, they don't always work out. So if you're taking profits along the way, you have something to show for it. You don't need to hit a home run. If every once in a while a big fish trade comes along, you don't get that home run, but you get a triple or a double in baseball parlance, okay, you're still well on top, and you still have a lot to show for your trade. And then think about learning how to use credit spreads and the part of the big fish income strategy to generate an income. Because just like I showed you before, sometimes when we're trying to wait for that break and run lower, it never breaks. You can make money that way. And then learn how to use the shark bite trade to make extra money right in that first initial 50% of the move. It'll make a difference, anywhere from 15 to 20% more profits right off the bat. Okay? All right, so keep that in mind. That is the opportunity of the big fish trading system. And I want to let you have access to this on-demand course for the big fish trading. Okay, now this is, I don't want you to hand this out to anybody, but this is the big fish price, and it's the whole bundle. And you go to www.valuechartstrading.com/shark. This is the whole program for big fish trading. It is one of the best prices we've ever done for big fish trading, the whole course. And the reason why I want to do it now is, again, what I'm about to show you, what's in the water now, because I think you will be very surprised how many opportunities are coming up, I believe, in the next couple of weeks that will allow you to utilize everything you can learn in the big fish trading course to just go crazy and really take advantage of what's going to come up in the markets. So look in your chat box right now. It says valuechartstrading.com/shark. Now this is easily a $300-400 work program, because if you got it in pieces, that's what it would cost, because we put the complete big fish course, the income strategy, as well as the shark bite component all in one big fish trading course and we're only asking $147 today. I mean, if you look at the profits that I've pulled in utilizing 10 contracts, divide that in half, you're talking potential thousands and thousands of dollars per trade on very small number of contracts. And the whole course is 147. My gosh, you could trade big fish with one contract and make 10 times that. But anyway, valuechartstrading.com/shark. All right, so let me do this because I know, again, this is that same strategy we talked about earlier. Did not move, we still made money. Okay, here's that other one, $23,000 worth of profit in 2 big fish moves. Here's the double top move. Here's the right shoulder move, 23,000 right there. This is that initial price line trade. This was a $55 move. We made $63,000, and I even took profits early on half the position. All right, that was a simple pullback trade. All right, so let me show you this because the first time I ever did big fish, and this was just the basic course, I had a gentleman contact me a week later after the workshop, after I did it live. He said, Dave, I want you to let you know I made over $20,000 in a trade based on what I learned in the big fish workshop, and it's helping me pay for my grandson's next semester of college. It was he was so happy that he could do that, and it made me feel great because I felt like I had a small hand in it. Of course, he took the risk, but I gave him the tools to know how to take advantage of an opportunity. So speaking about opportunities, again, $147 to make sizable impact in your portfolio is not much to ask. It's again, valuechartstrading.com/shark is the link. Again, it's in the chat box, but let me go ahead and jump ahead. I know some of you are asking for this. Let's go to the charts right now and talk about some opportunities, okay? I know some of you have been looking forward to this. I'm excited. I was watching, I was reviewing what the markets did. Again, right here on the top, this is the active link right there, valuechartstrading.com/shark. Now let's look, and I want to first talk about the indexes, okay? And this is what we do with a lot of our traders. Look at that weakness today in the spider. Look at that daily chart. Substantial move of 1%, but that's not what's interesting about this trade. What's interesting about this trade is that the short-term time frame was showing a lot of weakness already. Now I can't draw on these active charts, but once we broke this support level, I can draw these lines. Once we broke that support level on the hourly, it was already moving lower. You can see that the MQ momentum, or MACD, how some of you use that, it's already breaking lower, and now we're starting to move. I expect the S&P 500 to test and possibly push below the 50-day EMA tomorrow. Oh, you don't have to have the value charts indicators to do this. See, a lot of big fish trading is opportunities based on price action, support and resistance levels, momentum. If you want to play divergences, you don't have to have our indicators. Of course, I always believe in our indicators as superior to everything else, but opportunities, you can still see it. No problem there. So that's the S&P 500. The Dow, you can see in the diamonds, substantial break today below the 8 EMA. Now, we did have a late day bounce. That was right off the 50-day because we actually went through it on the Dow, closed right above it, but there's a significant amount of downside momentum. And then last but not least, the NASDAQ. You see the NASDAQ actually had a stronger bounce here over the past week and a half. We didn't get close to the 50-day. That's my next target. I believe you're in for at least another 1% move lower. It depends on the strength of this down move. Now, these particular patterns, again, these are the indexes that control the big fish move. Now, of course, a big fish move can work in opposition to the index, but it really works well when the index is making a strong move, that we talk about opportunities doing the same thing. Now, Tesla, I'm being a little patient. Someone asked about Tesla. This looks like a double top, okay? Looks like a double top on the daily. You can see the double top on the 60. I believe we're going to break and start to run lower. If you're almost there, it has to, you have to look at, especially with this is called a yellow hat doji. This is a bearish kind of setup from the daily. So I'm looking for it to come back down to around 242, 241. That's what I'm looking for. And then we'll see what will happen. On the daily chart, you really have a potential to pull back, kind of like we did here on the 7th. But again, you need to use your big fish strategy for this. All right? Yeah, anybody can just jump in. But it's going to be very painful if you revisit the 252 level and you get in here at 247. That's a potential $5 stop loss, and that's $350 a contract. So you really need to know what you're doing on the smaller time frame. And the big fish strategy gives you that tool. All right? And you can say, well, Dave, I don't want to spend $150 on the workshop. So that's fine. Spend $350 on the stop loss, because that's what you're going to end up doing if you don't enter the right way. All right? Next is Netflix. This one I like a lot. And I actually put this out on a free video the other day. I'm watching Netflix for a break below 617.34. Now you can see we broke it this afternoon. We came up, we retested 617.34, and then we're starting to go lower. Now the next thing is the 8-day EMA, which is 611.81. I think we're going to go lower from there, and then I think we're going to go, you're going to go to 600, find some support, and then potentially pull back to, I think, 577 in a weak market. Now, remember what I said about how you utilize options on the small time frame to enter, and then the trading opportunity, you plan your trade on the daily. Well, think about it, folks. We're sitting at 615, maybe 616. And I'm saying I think we're going to go down to 577. That right there is a potential $40 move to the downside, or $38 move. $40 move times delta 70 is $2,800 per contract. That's what I'm looking for in Netflix to the downside. Okay, think about it. That's not 10 contracts, $30,000 in a couple of days. If the market falls hard, yeah, Netflix is going to just snap back. Okay, Google, same thing, 50% retracement. Okay, now we're pulling back. We closed below the 50-day EMA today. Okay, below that, we're looking to come back to 532. All right, and if it breaks below that, this thing can get quite ugly in a weak market. So this potential move is roughly $15 to the downside, plus potentially more. Priceline is always great for big fish. You see the double top right here, double top right against the 50% retracement. We broke, and now we've made a lower low. We're actually below the 50-day. This thing's already on a bus, and it's heading lower. You're at 1195 where we closed. The target is 1162. All right, I've seen Priceline make a $30 move in one day. Look at this bar. See that bar there? I've seen it do that in one day, easily 2 days. $30 move in Priceline is $2,100 a contract. Clive, everything's outlined in the big fish strategy, but I'm usually trading in the money options with at least 7 days, depending more. Honestly, if you say I'm going to trade the ones that expire on Friday, I said that's fine. Well, what happens if we get to Friday and we're down 1180? Well, you take your profits, say thank you, roll it over to something, a week later if you're still bearish. Most people make a big deal of like, oh, if I buy the wrong options, I'm in a load of trouble. Well, that's usually because most people buy out of the money options. I buy in the money options, so there's a lot of intrinsic value. And when it's moving my way, the delta just keeps climbing. So it's not that I'm going to lose much. If I have $1,000 profit per contract, I'm not going to worry about, $60, $70 worth of quote loss of my profit because I'm switching out another week, because I'm still trading the potential move. Okay. Very, very nice setup in Priceline. I'm going to give you a couple of more. Let's look at Amazon. Amazon's a little bit tricky. I'd be careful because it's already on this hourly. It's already gone through a 50% retracement. See that? And it's actually gone down to the 78.6.4. This is a potential double bottom, and it looks like it's going higher. Would I trade Amazon in a bullish sense? No, not if the NASDAQ is doing this. See this? There's the NASDAQ daily, the QQQs. It's pointing in one direction. Sure, you can go counter trend, but I'm not going to. That's kind of foolish. That's like swimming against a riptide, trying to get back in when the water's pushing you out. Okay, you do not want to do that. And then let's just look at CMG. CMG has been in a nice, quiet, sort of sideways consolidation pattern. It's breaking lower with the NASDAQ. Watch for a break below this swing low, 618.5. Today is 618.71. Tomorrow, if the market is weaker and CMG breaks lower, CMG could go lower. But of all the trades that I like best, I like Netflix because it has a pretty large potential pullback. Again, this is a potential $40 move. I like Google because there is inherent weakness here. This could pull back to 532. I also like Priceline because Priceline usually is pretty clear. And if it does break, this is a quick move of roughly $30, $35, very quick. And then Apple, I don't like as much, but the patterns in Apple, see the inverse head and shoulders pattern bounce off the 50-day EMA, and then we move back up to the 76.4. At this point, what you can do if you really want to trade Apple, the big fish opportunities from that low to this high, but you see we're almost there. We're almost back to the 128 level. We closed at 129.75. All right, that's the problem with Apple. It just doesn't move, it moved 7 times less far after that split. I loved it when it was a $700 stock. Now it's just hard to trade. I don't usually use on swing trades, on big fish trades. I'll look for the weeklies if there's a much longer term trend, but stick with the dailies right now. Is there an additional discount? I'm showing you a potential $2,000 trade, and I'm asking half price of what I normally charge. The reason why our workshops are so reasonably priced is because we're active traders. I don't do this so I can create $10,000 sell 10,000 workshops. It's not what we do. What we like to do is give you the opportunity to make money in the markets and basically be able to fund your own education in the markets, because there's a lot of junky programs out there. We know our programs work. This isn't something that I just pulled out of on the back piece of paper. I traded this strategy going on to a year and a half already. All right, I have a lot of people that's made a lot of money, and I've had people take these big fish strategies, adapt them, to the positions they already have. I have one gentleman with 5,000 contracts of Apple. Yeah, on a monthly basis, at least once a month, he'll say, Dave, I did a shark bite trade in Apple. And he uses the strategy in a way when Apple makes a $3 to $5 move, that gentleman, he brings in close to $10,000 just automatically. He sets it up in a certain way. He can make a lot of money based on just this small part of the big fish course. And he just trades the heck out of Apple using this strategy. That's all he has to do because he's so good at it. It's not a question of, hey, let me throw you this strategy and this strategy and this strategy. Learn something that works and make money with it. Master it. Look for those opportunities. Like I told you, the markets have been moving like this. I'll show you in the QQQs. Look at the daily chart. This is March. This is April. This is May. Okay, we're starting to break here. This is a bearish divergence double top. Okay, now, if you break right here, you're back to the 50-day. You break the 50-day, you're going to go lower. I think you're going to come down to here. You break below this set of lows, which is basically the lows for the past 3 months, you're going to have some major pain down to here. Okay, and that's the lows of the year. You break below that, we're going lower. Big fish trades, especially to the downside, profits roll in very, very quickly. That's why I asked to do this workshop in big fish trading, because the opportunity is there. All right, if you're looking at Priceline, okay, same chart. Do you see if we break below 1170, where do you go? You go right down here, 1132, and you break below 1132. The next level of support is 1,000. That's a potential 200-point move. 200-point move. Okay, I'm not misspeaking. 200-point move is like $14,000 per contract in Priceline. Yeah, who cares if you have to roll it out 3 times? $14,000 per contract move. That's not peanuts. That's major move. Okay, and you say, well, it can't make a move $200. From this point right here, February 2nd to February 25th, that is 21 days. I know there's an earnings thing here, but 21 days it moves 200 points up. Guess what? If it takes 21 days here, 2 weeks from now, this thing could be down here. It just can't. Okay? And I'm not teasing. That's why I'm running this workshop today. All right? That's a $14,000 move. That's amazing. So anyway, I hope you see the opportunity. I can't lay it out any more plainly. That an opportunity to make money in the markets, and the cost of your education is $150. You can make 5 times that much money on one big fish trade with one contract over 2 to 4 days. That's no joke. That's very possible in the realm of a big fish trade. And then you'll have the tools to see and understand when big fish opportunities are coming up. You can do this on your own very easily. So go to valuechartstrading.com/shark. Take advantage of this nice discount. I hope you do, because you don't want to be looking at the markets, 2 weeks from now, and the guys on CNBC saying, wow, that was a really quick 10% correction. I didn't see that thing coming. It just hit from out of the blue. And then when you flip over to Netflix and NASDAQ, we're down $20 or $30 from where we are sitting tonight, and you could have taken advantage of it. Okay, a $20 move is $1,400 a contract. $30 move is a $2,100 per contract move. I mean, we're not talking, $50 a day here. I'm talking about thousands over the course of a swing trade. Most of the expirations that I do, Lowry, is I usually go out. It depends on how quickly I see the opportunity developing. And if I think this is going to fall to a certain level over the next 2 to 4 days, I'll probably get the ones that expire next week. The options that expire next week. Oh, yes, Douglas, this is an on-demand video. So once you complete the checkout process, you would go to the members only area with your username and password, and you could access the on-demand video right there. Now, it is a little bit later in the evening, maybe not for you guys on the West Coast, but you could always watch it. It's about, there are 2 videos there, and roughly they're about 2 hours a piece to an hour and a half a piece. The shark bite trade's probably an hour and a half. The original Big Fish course is about 2 hours. The trading room is not part of this. This is an educational course. The trading room is separate, but you could always contact us at support@microquant.com. I think we could hook you up with a, once you get the Big Fish strategy, we could hook you up with a 30-day trial. I believe that we ask about $7 for that, the price of a Starbucks. Okay. Yeah, I'll teach you this. I mean, look, I already showed you the opportunities. I showed you Netflix, Google, Priceline, Amazon, CMG. I'd focus on Netflix and Priceline and potentially Google. Apple is starting to pull back. The main thing is you have to watch the markets. Watch them closely, and then watch the different levels that you are on the Big Fish trade. Do I just buy puts and calls? For the standard Big Fish trades, yes. I know that the bid-ask spread on certain options are wide, but it's almost a question of keep in mind the time frame that you're trading. You want those bigger time frames. Of course, you want to enter well with your entry trades, but all of that is outlined in the course. It's complex, but not complicated. I hope that's kind of clear. There are steps that you have to follow to do this well, but they're complex because you kind of have to check them off as you go, just to make sure you do it the right way. But it's not complicated. The rules are straightforward. Baidu I looked at. Baidu, we're kind of bouncing. It's close to, see how it came up and hit the 50% retracement? Baidu was actually trade off a double bottom here. Now Baidu's a little bit strange. It got close to the 50-day. It hit the 50. It got close to the 50% retracement, but it ran into resistance at the 50-day EMA, and it's falling backward with the market. Now, this reason why this is complicated. You see, the momentum structure is still bullish, but it's living in a world where the NASDAQ is getting weaker. I'd be a little bit careful with Baidu. Okay, and the next is you're asking about Alibaba. This one you have to be a little bit careful of. Things fly around all the time with Alibaba. Yeah, that's made a nice retracement. Still a lot of upside momentum. I actually think if we're going to push higher, we're going to go close to 99. But today's weakness kind of hurt that upside momentum. It may make a small double top here on the hourly chart. If you see that, then you're trading a retracement trade in Alibaba. And that retracement trade basically would be from this low to this high. If it does pull back, I just basically say it comes back to the 50-day EMA, which is a potential $6 move in Alibaba. Again, what you're always looking for is a big fish stock. Alibaba's okay. It's not a big fish stock, because whereas we're talking about a $6 pullback in Alibaba, when I'm looking at Priceline, I'm looking at a potential, $30 move. Okay, you got to make your big fish trades count. Do you want a $6 move or do you want a $30 move? It's pure option, delta. You make much more money in a $30 move. Okay, that's all I want to talk about with those specific recommendations. I just wanted to show you the big fish stock. I'm not going to go into individual, analysis of each single chart. But I really feel, and I have a lot of people that have come back to me talking about their experience in the big fish trading system, and it's quite impressive. I always tell people, the first time you do it, be careful. Use a small number of contracts. Use one contract. Use two contracts. Get a feel of the trade. The opportunities will come around again and again. Now, I haven't been expecting a 2-month layoff from big fish opportunities, but I'll tell you, I've shown you where I feel the trades are coming up now. Again, don't hesitate in getting this course and reviewing it. You don't want to be looking at the markets 2 weeks from now and saying, man, I missed that 10% correction. Dave told me that Tuesday night that they were coming around. 2 weeks later, it's the first half of June, and the markets are correcting, and you missed out. So go to valuechartstrading.com/shark. I look forward to hearing back from you. Feel free to contact us at valuecharts.com and let me know how you did. Again, people in my trading room, we've been talking about some opportunities. We're going to be looking at them even more. So I hope you can join me and learn more about big fish trading, because this is one of our prime strategies. When the big fish are in the water, the opportunities are there. I showed you at least 3 based on the movement of both spiders and the QQQs. They're there. So I hope you take advantage of it, and let us know if you have any questions. So thank you again for joining me this evening. Again, it's valuechartstrading.com/shark. Take advantage of that special 147 price today, and I wish you all the best of luck. Thank you for your time this evening. Good night.